Hello again, everybody. It's Harry Boxer, the Technical Trader at thetechtrader.com. It's Saturday, November the 12th. This is the weekend webinar. Well, we've had some pretty eventful occurrences in the last few weeks, technically, and this week was no exception. It was actually even more important because when you look at the S&P 500, you'll see that after a massive 1, 2, 3, 4, 5 waves down, we had a big reversal bar, a spike that took the S&P from under 3,500 to 3,900. 400-point run up, and then a Fibonacci retracement of about 50% that took it back down towards the 3,700 range. And from 3,700, we went up to 4,000, closing at 39.93 roughly. Very, very solid week for the market, and a great close. Thursday and Friday were big with gap up on Thursday, and then a nice with the economic news. So, folks, we have a long-term downtrend still intact because the declining top line of lateral resistance has not been taken out. And 4,100, 4,120 in that zone is a big number. But I also think that we're at a 1, 2, 3 here, and the top of the channel could result in a pullback. We may get a little bit of a follow through first, perhaps to that angle there, which catches it up to about 4,000 and 40.50, then a pullback in a wave 4. Potentially wave 5 could get you to 42, 4,300. We'll see what happens then, but that would have to take out the juxtaposition of 3 resistance lines that come in around 4,100, 4,120. That's what we'll be watching for next week, with support at 3,900 and a retracement at 3,790, 3,800 down there. I'd rather not see that, of course, but we'll see what we get. Here's the NASDAQ 100. The NDX looks similar, although this is different because the pullback was greater. And it really amounted to a V bottom with right-handed extension, or almost a W bottom. The breakout across the double top was key on Friday. Resistance at 11,680 was taken out with a close of 11,817. And that was up 1.8% on top of a 7 and change. It was up nearly 10% for just a couple days. But if you take a look at the low to the high on this pullback low from 10.6, we went up to 11.8, 1,200 points. That's about a 11-12% gain in just a week and a half. But so breakout above the double top was key. Now there's some clear sailing to at least 12, 12.1, maybe as high as 12.3, 12.4. The declining top line comes in around that level, so I would think that would be a tough area. If we do have a follow through, then the pullback support would be right about where we broke out, and that's about 11.6. The IWM small cap index also did well, and notice where it closed right near, didn't close it, but it tagged the declining top line, connecting that high, this high, not quite, let's see, right near there. And there's also lateral price resistance there too, so around 190 is going to be a tough area for the IWM. We get through it, we're looking at 200 to 202 area. That would be a breakout. If we do get a retracement, we might back off to test the gap here. About 181 on the IWM, the secondary support 178, and then 174. The extension target, as I said, is up around 200, but that would require a breakout. And right now, a lot of the indices and stocks individually are back up to declining top line, so we may get a pullback. And the transportation index has had a really big move after a 1, 2, 3, 4, 5 wave decline. We've gone from under 12,000 to over 14.5, 2,500 points. And we've done it pretty rapidly, especially last week, where the market in the last 7 days, we've gone from about 12.9 to 14.5, 1,600 points. And according to what I'm seeing here, a close above the declining tops line, which might be quite bullish. If I draw it exactly off of that line there, we got right to it. So again, a lot of indices and individual stocks you're going to see today have rallied. Many of them broken out, but some of them have just come up back up to your declining top side after 5 waves down. 1, 2, 3, 4, 5. I'm not surprised it was a rally. Now the question is, how far can they extend this, if at all? We're looking at an extension, maybe 15.3 range if we blow out. Any move up into that zone is going to require a pullback. I mean, I think that the market itself is head ahead of itself, but you know what? Beginning of every major intermediate move, we see these kind of sharp spike thrusts, and then they calm down and relax and retest. I would think a retest would have big support at 13,750 on the that transportation. Let's look at the underlying technicals. The oscillator for starters, which at the beginning of every intermediate move, when we get severely oversold, like we did minus 280, the low was minus 281, and then the high was plus 238. The most overbought reading we've seen since back after the 2020 drop in early March, April, when the market just exploded off that low because it was so extremely oversold. We had that same kind of reading here and there. Both of these led to intermediate moves. And what happens is that, and I'll explain this one more time, McClellan oscillator is comprised of advanced declines and up-down volume. And when they are 8, 10, 12, 20 to 1, you get this kind of a thrust. When the market gets into a more normal state and continues to advance, the technicals will narrow to 2, 3, 4 to 1, not be 8, 10, 12 to 1. And as a result, the oscillator itself actually comes down, even though it's even though the market is still moving up. You can see we got back to zero and bounced, but we've been above zero for a month. And so that's actually, I think, a good sign of an indicator of strength. The percentage of stocks above their 40-day moving average has increased dramatically from single digits near 8, which is historically a low level. Now, obviously, we got down in when the market got crushed in 2020. We got down to 1.43. That meant less than 2% of stocks were above their 40-day moving average. I talked about it. That's a complete blowout. The normal range is 8, 10, 12%, and meaning 7 out of 8 or 8 out of 9 stocks are below their 40. Well, we got to now 7.97 at the low, and last week spiked to 75. An amazing move in a very short period of time, but obviously pretty volatile market we're in. Overbought is upwards in the mid to high 80s. We're not quite there yet, but that's normal for the beginning of every thrust. VIX never got to a level at which where it's extreme fear, but it did get up into a range of, for most stocks, most indices bottomed when we got up to the mid high 30s to low 40s. This is an exception, of course. Now you can see we've come down to 22 from 34.5, and we're at the lowest level in 2 months. This, before it gets extreme, you can see it somewhere in the mid to high teens. Okay, let's look at some of the ETFs we follow closely, and then we'll get to some of the components. Well, I'll start with the components. Apple, big rally off the low. I mean, talk about volatility. You don't see Apple that volatile too often, where we whip up, down, and back up again. Spike up off keys. Right now, key support on Apple appears to be 137.8 and 133 3/4, 34, right there. Triple, quadruple bottom down there. Now resistance for Apple and key is 157.5. And should you get through that, we're looking at 163.65 as your next target. Amazon got hammered, and if you look at the overall pattern from the double top, it's a 1, 2, 3, 4, 5 waves down, 5 sharp waves down. Took Amazon from 181 to lose 100 points and get down to 85. Spike up and a strong close for the week on that Amazon with the breakaway gap on Thursday. And a sharp run up near resistance, and there's a gap resistance here at about 104, 105. We fill that gap, 109.5 should target. 109.5 also happens to be near a declining tops line. Actually, that comes up near closer to 113. So let's just say your targets are 109.5 and 113 roughly. If it gets really jiggy with it, we can see Amazon to the next level, 123. I'm not calling for that, but it's always a possibility. Google also with a big spike off a low. And take a look at it. Coming off the high, looks like a 1, 2, 3, 4, 5 wave decline. The spike up could get you back up to 104, but there is some resistance here at 98.5 first. So watch early next week, 98.5 on Google, and then 104.5. If this is an important bottom, we'll probably back and fill and or do a V bottom with right-hand extension. It supports the gap at 91.5, 65 area right there. But an impressive move off the low for Google in particular. Microsoft, boom, really big move on Microsoft. From a low of 213 by Friday's high, we were up 256. And you got 40 points on the Microsoft during the week. That's a pretty strong move, including a breakaway gap there. A move above a double top and with lateral price resistance is always important. However, it did not close above that. The next resistance and target zone would be 260, 65 area up here. You can see that Microsoft is still in a massive decline in a 1, 2, 3, 4, 5 wave move. That basically tells me this could be an important bottoming pattern. We'll just have to see what it does with, going forward. Market could extend a little bit and then back off and back and fill for who knows, even a week or so, and then maybe go into a year-end rally. That's kind of what I'm thinking. Netflix, certainly one of the better looking charts, although it was the worst, #1 worst stock on the NASDAQ 100, having dropped from 700, folks, to 164. That only took about 7-8 months. Now, this pop-up platform, breakout with a breakaway gap and retest, fill a gap, and then snap back, look augurs well for Netflix to at least retest the high at about 305, and then move up to about 325, 28, and fill that gap completely. But beautiful 1, 2, 3, and maybe 4 consolidates, and then 5 gets you up in that zone. Netflix looks good. Best week in a long time for Meta, literally exploding off the low. Look at the long-term play. You go way back in here, back in 2015, 16, you'll see some support right around 89.90. Well, we got right down to it. The low was 88. By Friday, we're at 115 nearly. That's a huge move, even for Facebook. And you can see up 5 out of 6 days with a gap here, gap there. Key overhead resistance now 118.19. The declining top line comes in at 122.24. Some resistance to mid-120s. I would look for some kind of move into that zone, then a pullback, and then we'll see where we're at. Not a bad move. Look at Tesla. Massive decline, triple top 318, and then a drop down to 170. What was it? 180 even. So, and if you look at the angle, it's a 1, 2, 3, 4, 5 wave decline as well. And you could construe this as a 1, 2, 3, 4, 5. So it's a fifth of a fifth. Not surprised that Tesla had a nice bounce. Wasn't spectacular. Only Friday this stock really rallied. I'm wrong. A little bit of a move on Thursday too, but the volume was big. The Tesla's going to have to get back above Thursday's high. If you see Tesla early next week off of 191, look for about 207 to 210, maybe higher. We'll see. Not the best chart, but it might be a bottoming pattern, or at least a bottom might be in place here. NVIDIA had a really nice move off the low. Look at that spike and breakout, taking out a 1, 2, 3, 4, 5 wave decline. Big reversal bar at the low 108 to 164. That is a massive move in a month for that stock. And that's a key breakout above resistance in that zone. At this point, there is some overhead resistance that comes in just above where we are. And then we're looking at 179.80. And of all the stocks, this one looks among the top couple on the NASDAQ 100 generals list. So that covers most of the stocks that we follow that are NASDAQ generals. Let's look at some ETFs. Semiconductor stocks actually led the way, but right to resistance. I mean, right to resistance, a double resistance level here. After a 1, 2, 3, 4, 5 wave decline and a big reversal, we've gotten a nice move off the low, which indicates a bottoming pattern. If it backs and fills in this area or even breaks out and then pulls back, we're looking at leadership from the semiconductors. At least that's what it appears to me. My ultimate goal is to retest 246 at some point in the near future, potentially. Financials also broke out and closed above this level, which now tells me that the next key resistance comes in a 93 area. So with 85.90 the close, if we get up to 93, we're likely to get a pullback. If we actually blow through that area, then it tells you how strong the market rally is. But for now, it's an inverse head and shoulders, a neckline breakout, a retest, spike through resistance on a breakaway gap here, and then a nice consolidation. So financials and semiconductors doing great. What about biotechs? Well, we did get a breakout, it appears on Friday. The biotechs are not leading by any means. Obviously, quality usually leads, or growth leads. Now, biotech is much more speculative because of the lack of earnings in most cases, unless they're large biotechs. But you can see that the good part is that biotechs held up better. You look back at the overall chart, the financials and the semiconductors made lower lows. The XBI did not. Neither did the LABU. Although they're not leading now, they held up better than the rest during the September-October drop. We tripled bottom just around 596 zone on the LABU, and right now we're up against resistance. If LABU pops next week, I'm looking for 10. If it pops beyond that, I'm looking for 13. If XBI plays catch up, we're probably going to run up to at least 89 to 90 in that zone. Secondary target would be 95, 96 right there. So let's see what happens with those groups. Now, what about oil? Well, it looked to me like a massive head and shoulder and a breakdown right there, but there was no follow through. Instead, they formed an inverse head and shoulders and broke back out to resistance and backed off. This is touch and go because this might be a 1, 2, 3, 4, and we could come down in the fifth wave or break out here and head out sharply higher. I would say oil is not tipping its hat which way it wants to go, not yet. Looking at UCO, similar. And Gush shows a different pattern because it's a double and it's much stronger. If you see Gush next week, take out 209, it might run into the 230, 250 zone. Where I would stop it right now would be under, say, 172.3. What about nat gas? Well, you can see Boyle's getting crushed after a big pop right to resistance. Coal is the one in play now. But even that one's too volatile for me to say a definitive pattern is being developed in oil and gas, in the gas sector. So I'm going to avoid that for now. What about copper? Well, if you look at FCX, which is a key swing and a key breakout for the tech traders, and the SCCO, major breakouts and strong surges. SCCO target is 65, FCX target is 41 and 43.5. I'll get to them a little later. But so we've covered the precious metals, except for we didn't do gold and silver yet, so that's important. Check out the GDX. And for me, these are major breakouts with volume. I'm looking for pullback retests, consolidations in this zone, and a setup 31 and 33 or more on GDX. GDXJ, the junior golds, look good too, but we need to break out over 35 to confirm the big moves underway. Nevertheless, they've all broken downtrends. And we're on our way back up on gold. AGQ looking pretty similar. Targets head out above the declining top sign lateral price resistance. Might be headed to 30 and 33. Your next targets for AGQ. A lot of individual gold and silver stocks look great. I'll get to some of them later. So we've covered the precious metals and gold, oil, silver, etc. Let's move on. A lot of individual stocks to cover. We'll start with biotech ABCL, which I put out as a swing here. Worked out well as it reached target 1, pulled back, and target 2 there. Right now it's broken out again. Friday was a big day for it, up 79 cents or 6%. If it get back up to 14.5, my next target on the FSL is 17.5 3/4. AEHR, HB loves this one. It's a tech trader swing. What's not to like? Big winner for us there and there. And now it's moving yet again after pulling back. I think this is on their way to a much sharper angle. But the breakout on Friday hasn't me convinced we're going higher. Looking for 29.30. AKRO, what a fantastic biotech this is. Look, it had a long decline. It took it from the high 30s down to the single digits in the 7-8 zone. Then it popped and based out for 3 months. The massive breakaway gap on biotech news. Huge volume, traded 50 million. And then this little wedge form, at which point I said this looks like a mud. Look, when they hold that long and don't come down under this into the gap even, 25 is support. And then it broke out above 29.5. I'm not surprised to see mid 40s. Now platforming, looking for mid 50s. ALLK, after getting crushed from over 100 down to 2 and change, slow steady rise back up again. It had a nice 1 month long pullback consolidation to the trend line and a 50 holding 5.5 and then spiking to 779 before pulling back and popping again on Friday. Looks to me like this one wants to go higher. My targets are 8 3/4 and 10. Apps, what a move Thursday, Friday on this baby. Some of you may remember one of the biggest winners I ever had, literally from the 3-4 range when it broke out here to 100 and change, 102.56. Well, it came down hard. It's recovered nicely. Breakaway gap. It's out the declining top sign, all the moving averages, and then it follows through on Friday. There's some resistance at 20, but my target beyond that is 25. We'll see where it goes from there. ARRY, inverse head and shoulder breakout. This is a tech trader swing. It spiked at a target, pulled back down in an orderly fashion, but it took 2 months. Then a little inverse head and shoulders formed in a breakaway gap last week in a breakout. Targets 24 and 28 going forward. ASAN, I really like the way the software group has come off the lows. This is one of them, although Friday was a big day for it, up 293 at 15%. And it did trade okay volume. It's still forming a large base, so it has work to do. But I like it for a move to 30 eventually. Actinium, what a explosive move this had. First taking out your declining top sign and forming a wedge and then exploding vertically from 7 to 15. And now the pullback wedge. Either this pops above 1285 and runs again, first target 15, second target 18, or it moves down below and you're stopped out under 10.5. AU in the gold sector, Anglo Ashanti, Anglo Gold Ashanti, big move. 1269 vertically to 1868, a 50% pop to the gap. We'll have to see now what it can do next. My target's 21. Love to see a pullback retest in a lot of these goals. Well, for months now, I've been showing you AVDL with a 1, 2, 3, 4, 5-way move. It then went into a longer consolidation, but held support. Pop, pullback, consolidated. Look at Friday's breakout. 620 to 811, close at 8 up 180, 29%. To me, that's breakout volume and a breakout with a target now 11. Axiom. I was getting a little worried about the market was rallying and that stock didn't do well on Thursday, but Friday, a nice reversal of support. Let's maintain stops under 53. Your target is a retest of 66, and then we're looking at 71. Long term, $100. Well, we'll see. Another software stock with a massive decline and a major breakaway gap that held support for 3 days and then popped. Reversed, but an island reversal to the upside. Then a big move on Friday before pulling back late. The next target, if it extends, 28.9. Tech Trader Swing Bluebird broke out there and I put a swing on it. I got to target number 1 and back and filled for 3 months. Moving again. And it's right at resistance here. Let it get above, say, 770, 75, and the stock may be 11 or 12. CGC, I'm fully convinced marijuana stocks have seen their lows, but they're forming base patterns. CGC being a leader, ran right up to resistance on Friday. And should it get through 4 1/4, 430, we might see 5.5 and 6 3/4 next. Beautifully formed base. CLDX, inverse head and shoulders breakout on Friday. Now, the pullback got right back to the pullback low, so where the breakout point was, sorry. And usually that gives me a buying opportunity, at least from what I've seen. I'm targeting 42 and 45. CMBM, long downtrend after a big uptrend. It ran up to the resistance, filled this gap, and pulled back down and retested support. Breakaway on early in the week, and now a wedge. That is a nice setup. If I'm correct, this is about to make a move to 26 and 30. Compass. Thursday spiked, Friday exploded. Friday going from 218 to 421, a double in one day. Traded 34 million, unheard of for the stock. And your overhead resistance and follow-through target is near 5. Long-term 7, or longer term, intermediate. CROX. Big uptrend, big downtrend, which we were short. That was one of our better shorts all year. And then got all the way down to mid-40s and ran up to the mid-80s, back to the fill for 3 months, broke out Thursday and Friday. I'm looking, and I have a target at 111.15 zone. If it pulls back near 85, it might be an opportunity. Stay tuned. DOX, big move after 1, 2, 3, 4, 5 waves down. It exploded off the low and went from 22.90 to 35.43 in 3-4 days. So it's at resistance, so it may pull back or break out and then pull back, but it looks like a bottom in place. EBIX, monster move on Thursday, 9 million shares, 17 to 30.5, and then the pullback, at which point I entered a little early around 26.7. But I think the stock has designs on going higher. That's a massive breakout. EDAP, breaking out of a base and wedging and then exploding towards the highs of January 21. So we're looking at almost a 2-year high. The next target is 12. EGHT, after a long decline, popped out, pulled back, and formed a wedge and tested. Friday was a big day for it, jumping from 401 to 481, finishing a penny off the high, up 75 cents or 18%. Looks like a breakout on the way, and my target now is 5.5, and then 7. In the gold sector, EGO junior gold breaking out of a base. Look, keep an eye on that one. My targets are about 8.5 for starters. ELF, one of the strongest stocks on the board, and I say that with some conviction. When you go from 20.5 to 52 in a period when the market's having a real difficulty, it tells you something about relative strength. Yes, it was down Friday, but only 1.3%. And that's because it's near the top of the channel. So I wouldn't be surprised if it pulled back, but fantastic momentum, and I wanted to show it to you. EPWO, very spiky, very thin, a good story there in terms of new battery development. Explodes, implodes, explodes, and then forms a coil, pops again and pulls back. I think it's at support, and I think it's going back to 4.5 and 6. Those are my targets. Personal position, by the way. EXAS, major breakout, and it's long spike out of an inverse head and shoulders after a long decline. Here's a stock that dropped from 155.60 range into the $30 range. Actual low being 29.25. Well, it spiked up to 48 just in the last week and a half. So it may have, and it's near resistance, so it may back and fill in here, but your targets are 55 and 62. Extreme Network's been in a beautiful chart, and this particular move recently was powerful. 12.5 to 19. and then a reversal. But if it consolidates in that zone in a 1, 2, 3, 4, I would look for a fifth wave into the low mid-20s. We talked about FCX, copper stocks are on the run. FDMT, something new I wanted to show you because it spiked on Friday from, it looks like around 9 to 13 and finished at 1206 up 233, 24%. Breakaway move up to resistance, next target 16 3/4. FNGR, I just got to show you this chart because it's quite unusual. To go from 62 cents vertically to almost 10 and then back and fill in a wedge is quite intriguing to me. Now I don't know if it breaks out to the upside, but if it does, it can go crazy. FREY, long run up, 1, 2, 3, 4, 5-way move, a double top and a pullback. So it's a 1-2 now, but it looks like it may have finished wave 2 by breaking out here on Friday. Let's see if there's a follow through. Target 16 3/4. First solar monster breaks it with a massive breakaway gap, flags and runs, finally gets a pullback retest, holds it, creates a new rising channel. As you can see, breaks out above the high, pulls back and tests, and it's consolidating that zone. The first solar takes out 161.2. I'm looking for 175 and 195. Another gold ETF that's showing, bottoming type pattern, GDX. GPS, after a long decline, following a big move, that saw GPS or gap stores go from 38 range down to 8. We double bottomed, and on Friday we broke out, and I'm looking for a move to extend to 15. GRWG, the purveyor of equipment for growing marijuana to that industry, is leading the industry ahead. As you can see, the spike up off the low, having gone from 320 to 6, almost doubling in 4 days, is a big breakaway thrust that tells me we're at potentially bottoming pattern, but there is resistance overhead, just overhead. But let's see if it backs and fills or takes that out. Your next targets would be in the high single digits, 7, 8. Magush, with oil doing what it's doing, I think I mentioned this earlier, this is stronger than the UCO and USO because it is a double bull oil and gas production. GXO, the spinoff from XPO Logistics, with a big spike breakaway of the downtrend. Big volume broke it out too, running from 34.5 to 45, almost 46. My target now is 52. We'll see if it extends. Hudson, which has been on my list for a year and a half now, 2 years, quite a beautiful uptrend. Literally from 50 cents to $11. Over the last several months, it's been backing and filling in here, but look where it is now. Nominal new high, I believe, was hit on Friday, 1134. My target is 14. HLIT with a massive move from the July low that saw it go from 8.5 to almost 16, nearly doubling, and a 1, 2, 3. You got wave 4 here. If there is a wave 5, I'm looking for 17, 17.5. IMCR breaks out, retests, pops, and on Friday spiked 550 or 10% to 63 and closed at the high for the day going away. And this is the highest level, I think at ARRY. Let's see. Yep. So we're at a point now where this type of stock could go to mid-range 70, 72. That's my target. IMRA, what a beautiful chart. Coiling base, quiet, all of a sudden spike, coil, another spike, flag, and breakout. 6.5 and 8 targets. IMVT, very similar. Explosive move, a little flag, and a move up, steady move up that could get to 14 or even 17. IMBX, the tech traded swing when it broke out here, it ran up beautifully and hit my target, and then backed off. You can see after breaking through resistance, it's been flagging for 6 weeks. Friday was a good day for it, up 213. Keep an eye because I think you're seeing mid to high 40s coming. INDI, something I added this week when I saw the inverse head and shoulder type pattern and the neckline being broken on Friday with a pop on 5.4 million, which is a strong volume for that stock. The next targets are going to be 11 and 11, 12 zone, and then maybe we see more. INMD, a tech trader swing as well, popped on Friday. It closed up 8% or 275 and does have some resistance and mini triple top there. We get through that, we're looking at 44. With gold moving, the JNUG and nuggets look good. Here's an inverse head and shoulders and breakout on that baby, target 40. LABU, we showed you earlier, on the verge of a breakout potentially. Logitech, long downtrend, very long, after a massive up move. Breakout occurred more than a week ago with a breakaway gap. This was actually the breakout and the retest. Notice the moving average is crossing over. Had an island reversal and went vertical. Next chart. Next target, 68. MAC, well, on Wednesday, MAC had a monster explosive move that saw it go from 4 to 13 and change and then hold. Well, I really like when I see that. It usually indicates the stock's going to work its way higher. Looking for 15. MGNI, major downtrend after a massive uptrend. Are we reversing? Sure, looks like it. Went through a quadruple top of the breakaway move on Thursday, and what a follow through Friday, getting right to secondary resistance and secondary target. Your next targets are 13 and 14.75. Love to see a pullback setup. MGNX effect traded swing broke out and keeps running. It looks great. One of those biotechs that just keeps giving. I'm looking for 8 and 9.75. MODN, beautiful uptrend in the midst of a bear phase. Always something to watch when you see relative strength. Right now at resistance with the target now at 48. MP popped out on Friday. That's a breakout. I'm looking for a move into the 38.40 zone, followed by a potential test of 43. So let's call it 39 to 43 potential. MRSN broke the downtrend here, formed a platform and broke out again. It formed a 3-month consolidation. So nothing to do here until it gets over 8.25. But if it does, we're looking at 10.75 and 14. Nutanix popped and pulled back. We put a tech trader swing on it. It moved up a little and then had a 3-wave corrective that tested and created a new trend line. Then a breakaway gap and a platform right at resistance. And should it get above here, keep an eye on Nutanix going forward. Above 28.75, that target's 33. OIIM, beautiful base, and it continues to go sideways and coil very quietly. Keep an eye on it. If it pops, particularly above 450, you might see 5 and 5.75. Unset Medical, vertical move off a low. First, it spikes down to a new all-time low, I think 1141. Let's see. Yep, post-IPO all-time low, and then goes vertical from 1141 to 20, nearly doubling in 3 days. Anytime you get that kind of a thrust, you got to pay attention. Pullback consolidation tells me the next move is 22, 2.5, and 26. Occidental back near the highs. Move through 77, you might see 85. Look at that long-term chart. PACB with an important breakout last week, technically Thursday, and it followed through Friday, tells me we're going. Now, a bit of resistance perhaps at 11.5, but the target for me is 14. Perion, for strong earnings report, Perry turned around from 21.25 and ran to 25.75 and actually broke out with the next target right there of 26.65. You get through that, it's clear sailing into the low 30s. Purple, after a long downtrend, it popped and then had a falling channel. That breakaway 2 days ago, it was important. I put a swing on it. Purple had a really nice day Friday, up another 14%. Looking for a test of 6 and then 7.75. PRVB, beautiful base breakout, wedge, spike, pullback, hold support, and run up again. I like the way it's handling itself. Looking for 10-11 zone. RELL has been a beautiful uptrend for 2 years, 3 years. From 3 to 25, and it's 8-fold increase, folks, and it doesn't look done yet with a target now in the high 20s. Riata, looks like a base is forming. It's popped and closed above resistance. So I'm looking out for a test and a fill of the gap, perhaps to about 47.8. My next target, we get through that, it's clear sailing. Rivian, a 1, 2, 3, 4, 5 wave decline, a V bottom of the right hand extended, it ran up to resistance. It's been platforming for months now. You cannot let it go below the weekly low, which is 27. My target's at 37. 41, and then you're off to the races. Biotech Repair Therapeutics spiked up in June, consolidated for months in the coil, and now breaking out again. This is the highest level since last January. It looks to me like it's going to break and run into the low to mid 20s. RVP explodes in August, falling wedge into September. There's your breakout. From that point, it ran up to the target, pulled back, held support at the prior high, and it's making higher highs now. Love the way this is acting. Target 8, 9 zone, maybe 10. Rhythm Pharmaceuticals, breakout, beautiful move. We're all over that one. It ran from 5 into the 30 range. 31 was the high, then pulled back. And look at this consolidation flag, or whatever you want to call it. Just watch a move over 26 3/4 with volume, and it's off to the races. 34, 43 targets. Saba, 1, 2, 3, and then 4. Now, it's consolidated for a while, and you don't want to blow 31, but anything above 38 and stock could run into the $50 zone. Seed. Long-term inverse head and shoulders is setting this up for a big move, in my opinion. I'm not thrilled with the pullback, but it's near support at the trend line. Any day now, we could see something that spikes this one up, and you know the way that moves. Your key support now is around 8, 8.25. SGML, strongest lithium stock on the board. Look at this chart. Hit it for high 40s. That's what it looks like it could be. Shopify. 1, 2, 3, 4, 5 waves down, and then a reversal. Got the resistance, formed an inverse head and shoulders, tested the shoulder line, and then exploded and popped and broke out, targeting 45 and 49. SKYT broke out. Looks like a tech trader swing to me, and then a pullback on Friday. But I'm still looking for a move that tests 13 and then 16. TGTX exploded Thursday. Nice follow through Friday to break it out. I'm looking for now 11 and 15. TH after a 1, 2, 3, 4 might be breaking out here. Went up 4 days in a row, popping from 10.5 to almost 14. And should it get above 14.5, I'm looking for 20. TMDX, beautiful long-term chart. Impressive reversal bar down here back in February when it was down at 10, and it's now as high as 62 last week. But it doesn't look done to me, and the top of the channel says it's an $80 stock. TOST, big downtrend, reversed, retested, falling wedge, breakout to resistance, and a pullback, held the trend line, spiked up again, backed off. So I need toast to get to 22, 23, and then target 29.30. Tusk, fantastic junior oil, breaks out here, runs up sharply, pulls back, forms a wedge, breaks out, forms a mini wedge, and pops again. At the top of the channel, so it's overbought. Support is 540, target is 10 and 12. Twist, biotech stock that broke out, got to secondary resistance and pulled back and formed a larger base. Key breakout Friday, pops at 5, 10, or 15%, targeting mid-50s. Uber, I'm convinced based on discussions with a couple of institutional people, this is a good long-term play, a real good long-term play. Looks like a little inverse left shoulder, head, right shoulder with a double shoulder and a pop. If Uber pops 31, you should see 34. Get above that, I'm looking for high 30s to 40. VIST, a beautiful junior oil and gas stock that just run like the went from under 2 to 14 and doesn't look done yet. Target 17, 18. Verona, explosive move, a beautiful wedge, a pop, and a nice flag. If it breaks out of here, I'm looking for 14.5, 3/4, and that's 17.5 or more. VRT, a tech traded swing, breaks out, wedges, and pops again. Looks great here. Any move above the Thursday, Friday highs above 16, look at 19. Weatherford, an oil and gas related stock with a beautiful chart. This is an all-time high. The angle of ascent tells me the possibilities are at least $50 or more. XPEV, well, Chinese automotive stocks appear to turn around, but I'm going to point out to you that every day that's a green bar is heavy volume versus the pullback lows on low volume. A good sign, but it's got to get to 885, 88 with volume. And then you're on your way to 10.5 and 12.5. Zyme is a new tech traded swing. It broke out of a base. Looks like it might be headed to 11 and 14. And Zixi did exactly what we thought it might after 3 months of consolidation. Went vertical from 8.5 to 13.5, and it's pulled back a little bit, but that was your target Your next target is 15, and then we're looking at 1920. Let's sit on the long side. I'll show you some shorts, folks, but I'm going to tell you right now, I'm not favoring the shorts, and you can see why. Look how green they all are. For me, lots of them are run up to resistance. So let's take a look at them. A line right, back up to the declining tops line. If it breaks out here, the key is you cannot let this go over 233. Amberella, same thing here. Spike up to the declining tops line and lateral and resistance right there. So you got to be careful. But it looks like it's already broken the declining tops line after a big drop with the market and what looks like a potential bullish phase. This can go. A lot of these shorts can be covered. AVNT, same thing. Look at the bounce off my target near 28. AYX, big drop, but exploded on Thursday. A little pullback Friday. Still a lousy chart, like most of these stocks are, but I'm skeptical about holding shorts in this market at this point. Now, if you want to institute some new ones, and these are weak enough, they may very well make lower lows. Bill.com, 1, 2, 3, 4, and the fifth wave was shortened or truncated. Big spike up. Look at the move Thursday, Friday. You're at declining top side. If it fails here, then maybe you see a 30-point move down to retest, but it could very well spike up and test the trend line or higher. CDNA, implode Thursday, get down to 12.25. Well, this stock was trading at in the 80s. There's your breakdown, there's your bear wedge, and we can see that stock all the way down. But at this point, why hold anything short that's had this much of a drop? Same with COUP. Look at the breakout and the move up back to test resistance here. If it fails here, great, but if it doesn't, it could explode. Carvana, big day Friday. Up 16% of 34 million shares. With an implosion down to the bottom of the channel, I told everybody in the room to cover your CVNA. I mean, it's gone from 350, 60, whatever, 380, all the way down to 6 and change. Why would you want to look for another point or two? ENTG also bouncing off the bottom of the channel, back up to resistance. ESTC in the software group, probably too strong for me at this point. You should have covered when it hit. Right there, double bottom to the May low. FIVN got below my target, down to 46.80 before spiking to 63, 15 points. These shorts, when they're heavily shorted, the short covering can exacerbate a run-up. Garmin looks like it broke into the declining tops line, but it's at secondary resistance. If it fails there, it can still roll over, but why take that chance? MDB got slammed dunk from 381 to 135 quickly, just from July, August. Big spike up. When they do that, you know the short covering. MED also finally spiked down to a low near 96 from where we first spotted it at 225. MNDY makes a new low and spikes back up. You got to be careful with these shorts in this market. Net back up to resistance, could back up, but overstock. Same patterns, all of them spiking back up off the lows on short covering in a bull phase. RHI, we gave you a tech traded swing short at 99 and it got down to 65. Got to cover when you see a spike low like that, right near my target zone. Now coming back hard, and if it gets that over 84, it might be a buy actually. Ring Central, same pattern, spike down, spike up. SITM is broken out already. You need to be not short that. Snow. Well, after dropping underneath and rallying back and fading, a 1, 2, 3, 4, 5 wave decline. We had a 1, 2, 3, 4, 5 wave advance. Now multiple waves down. Got it down to that zone before the spike up. Can't be short these stocks in this market, not yet. Now, there's a possibility that any one of these have gone back up to resistance, and if the market rolls over, they can retest or make lower lows. But after a long decline like that, don't take that chance. PEAM, same thing. Tandem, same thing. Big spike down. You got to take advantage of any implosive move like that. 1, 2, 3, 4, 5, 6, 7 waves down. TREX, same thing. Down to 38 3/4. Snaps back sharply to 49.50. And you see that kind of a move, and the declining tops are broken. Might not be yet. Be careful. Every one of these have done the same kind of pattern. If they're spiking down, Thursday, Friday were big updates for them. So I caution everyone on being short anything in this market, unless you're just, scalping or day trading them. Any one of these that have had that big move could pull back early next week and do some retesting. Folks, that's a look at everything that we have to need to discuss, from the indices to the underlying technicals, the NASDAQ 100 generals, the ETFs we follow closely, and some longs and shorts. A lot of new longs on that list. Stocks are breaking out. I'm not saying we're in a new bull market. All I'm saying is we're in a year-end rally. We'll see how long it lasts. And we may be short-term extended, so we need to pull back, but the momentum is pretty strong. Have a great rest of your weekend. This is HB signing off. I'll see you later.